Hello, everyone. Shalom, Kevin. Hi, Ziggy. Tom Lano, how are you? B. Shaw. Everyone doing okay? So the Fed surprised everyone yesterday, being dovish. I just want to point out something, though, that even with the Fed being dovish, which was supportive for a rally in the S&Ps, and a Facebook beat last night, to me, it looks like a third drive to a top is developing here. I'd like to see one more high. The reason for this is the high here is 280.90. The high on the second drive was 281. So there's still some stops above this 281 level, I think, that has to be elected. So if they go for it, I'd look for a scale-in trade up here. Call me stubborn, but I do believe that this is setting up a three drive for a top. Give me a Y if you understand it. I'm looking for one more stop hunt above this high. Give me a Y. Hi, Diego. How are you? I also have a couple of announcements. I really don't know what to do with the euro now. It's probably coming off, but too much momentum up here at the high. I want to see what happens if we rally, get some type of rally, and maybe even one more high. As you can see, this was a confirmed high. This was a divergence, but you know, pretty good reading up here. I think it's close to, well, there's 76, so that's not ideal for me. Yeah, okay, triangle gonna break up. Okay, that's fine, because that's what we need, maybe one more thrust. So a Forex gal is saying that this is a triangle and we get one more thrust. Sometimes triangles are terminal thrusts, so that's exactly what I'm looking for, Forex gal. Good eye. Hello, Morrow, Maud, Matthew. So here's a couple of announcements in cable too. Okay, I'll take a look at that, Diego. 1 hour bearish on cable. Diego's got a good eye. Okay, maybe one more push up here. I see what you're looking at, Diego. The first announcement is very important. That's that tomorrow's the last day we start at this time. Starting Monday, change your alarm clock. We'll be starting 1 hour earlier. Everyone aware of it. We've been trying to announce it every day so that you're aware of our earlier start. We're trying to help out Asian and European traders, trying to make it more convenient for people to be here and not stay up all night. So I'll get up in the middle of the night to do that, because our mission here at ForexAnalytix is to build up and edify traders every day. The second announcement I have is you have spoken, and at our team meeting there was a decision made to add more crosses, more pairs to our service. So the team is willing, has heard you, and that's why you're going to have more pairs, and they're willing to take on more of a workload to accommodate our subscribers. Okay, so that's what a community does. We support each other. You guys have asked for more coverage, and we're giving it to you. How's that sound? Okay. The third thing I want to discuss is, I know a lot of people in here, like Cyril and everyone else, thank you, Jacques, know what I did in LAR and after LAR. It was much more, I'd say, community interactive. I relied on the community to, especially the very good traders, to give me screenshots. I could walk into an opening and not have one idea, and within 15-20 minutes the top guns in my community would be providing screenshots, and I knew who the good traders were, and it pointed my eyes towards opportunities. So I'm an intelligence gatherer. Okay, so of course we all always have our own ideas, but I'm a big believer in intelligence gathering from guys whose work I respect. Everyone with me? Any of you guys do that? You're welcome, Patty. So before ForexAnalytix, tell me if you could relate to this. Tell me if you could relate to this. You'd wake up in the morning, you'd go, oh man, I want to know what Blake is thinking on Morning Edge. I better turn into Morning Edge, right? Oh, Dale's on in an hour. I better get over to FX Street and LAR. Oh, Nick had a tweet on pound yen. I missed the tweet. I didn't get to see it. Oh, Grega has a big idea in the market. I'm going to subscribe to Grega, or perhaps I could catch an article he wrote on FX Street or get some type of trial. And then at that time, I didn't even know how good Steve was. I'm a leaker, yes. The president's after me. Scaramucci is, putting the case together. I'm an intelligence leaker, yes. Very proud to leak the intelligence that comes out of ForexAnalytix. So because they've all teamed up, I don't have to rely on the community as much. We're here to answer your questions. You guys aren't contributing as many views. We don't have as much time with 1 hour of analysis from the team. But what an advantage it is not to scramble to hear Blake on Morning Edge, not have to try and find and research what Nick is thinking, not have to try and find Grega and where his wave counts are. Don't you guys agree that it's all here for you? It's all here for you at your convenience. And now, anytime I want to know what Nick is thinking on any pair, it's at my fingertips. I know a lot of people really respect Blake and Blake's work, and I would only find out about what Blake was thinking because I'd be getting ready for my show when people would come in and say, well, Blake is thinking this. So anytime, all week long, all I have to do is pull up basic technicals on any pair, and I know where Blake's head is at. And if things change, which is also important because this is ever changing, it's a process that goes on and on 24 hours a day, that if there's a shift in views, I don't have to look for what they're doing. I get the push notifications, right? So they're working for me 24 hours a day almost. So my belief is that for 9 pips a month on a standard contract, that it's one of the best deals on the street, because I would pay that. I would have paid that before I joined ForexAnalytix to just have it at my fingertips and not have to search different analysts like Blake and Nick and Grega and Steve to know what they're thinking. You guys agree with me? So there's also some good news. We've had a very nice surge in new subscribers. I want to thank everyone that's already realized what I've been talking about here today, this morning. I know you guys want to get to the markets. So what I've been talking about are for people that haven't yet, to help them make a good decision, that it's a great value, break it down to what it is for an hour. Say, I think it's worth 90 a day for me to be able to know what Blake and Grega, there are trades that are going to pay for it in a day. I'm not saying they're always right, but their hit rate's pretty good. 70% is a pretty good hit rate. So if you haven't yet, click the link on the site and tell me if I'm wrong. Okay, so everyone that knows me for years knows, I don't really endorse anything unless I believe in it. And you guys have seen me be on the other side of things and call out a charlatan if they're a charlatan. So as far as I'm concerned, you may say that because I'm hosting the show, I'm not objective, but to be able to have access to these trading minds whenever you need it, and for them to notify you when you're away from your platform that something might be changing for you to consider, is, I think, the best value on the street. So that's the end of my speech.
Well, thanks, Dale.
Okay, Blake.
Hey, I appreciate it. Hey, with all that being said, what Dale's trying to say is, you guys try out ForexAnalytix. It's $1 to try it out. It's definitely worth your time. Now, I have to tell you, I got hit yesterday, and in one of my patterns in play, and I'm going to have to do another one here. Let me show you what I was talking about. What I'm talking about, Dale. And you said it. We don't always make money. We try. I mean, in our patterns in play, you can see the winning percentages and everything, out of all of our historical data. But yesterday, I tried to pick up the dollar Canadian, and I did this myself at a 161% extension. We were rounding this bottom right here, but obviously the Fed, the dovish Fed, it plowed through all those stops. It actually hit my stop, my personal stop. When I got home yesterday from the baseball game, I went out and I said, you know what? I'm buying the dollar Canadian again. This is all, the dollar is just so overdone. I bought the
Not
US
an easy thing to do, Blake. That's a sign of a pro. A lot of people get stopped out and they go, oh, I'm not going to trade Canada for a while and look for something else. Just because there was one more wiggle and you were right the market, wrong the trade, doesn't mean that you're not right the market. So kudos.
Thanks. We'll see how this works out, Blake? Because yes, Steve.
Good morning, my friend. Good morning, Dale. Good morning to everyone.
How you doing, Nostrovogi?
I'm good actually, and I think that the market is giving us some interesting signals today. So I think it's going to be an interesting Thursday and Friday, and might set the way for August actually. Having said that, Blake, I wanted your input as well, because yesterday you were away. We never discussed about it. Dale mentioned it, and you mentioned it as well. And I have no problem having open conversations and exchanging opinions, market opinions here, because I think people enjoy it as well. Do you really think the Fed statement was dovish?
Well, can I finish my thoughts on the Canadian really quick?
Sure. But since you mentioned it, I didn't want to forget that to ask your more detailed thoughts about the statement.
Okay, let me finish my thoughts on the Canadian really quick, and then we can talk about that. So the thing about the Canadian currency is, and I want to show you this really quick. The DSI, which is this is a highest reading I've seen since I've watched DSI on the Canadian. It's at 92. Okay, so when I got that last night, I'm like, you know what, this is a shakeout. Today was a shakeout. And I figured the euro was going to reverse. I put an order above the market, so I didn't get hit in the euro. I wanted to short it at 118. I didn't get hit, obviously, but I picked up the Canadian. I picked up the US dollar, Norwegian krona, because of we had a fib confluence, 161% extension, 261% extension, and trendline support was coming into play. And I'm like, you know what, I'm going to pick those up. So I did last night. After getting hit yesterday, I went back in and said, these have to be, this has to be an area where we, look for, hold on really quick. hold on, I got to do something really quick. Okay. This has to be an area where we start looking for some sort of reversal, and we are getting it, which is good. But with the Canadian, if you don't want to play the dollar, which is fine, you know, if you don't want to play the dollar, it's fine. One of the pairs that we don't cover right now is the Euro Canadian, and I want to show you that we're in this down channel, and I have a position in the Euro Canadian. I own it around here, but we have this down channel. We have a triangle, if you will. Here, let me just change the color here. We have a triangle, if you will, and we're consolidating Euro Canadian. Now, if the Canadian gets hit and you don't want to play it against the dollar, you can always play the Euro Canadian as well. The only issue that I see with the Euro right now is the Euro might have posted a really big false breakout, and that I was looking for, if you guys recall, I was looking for a sell up here.
I do. And you said that we would take you before you wanted to be interested in shorting Canada, as you know, Blake. I remember everyone's trades. You pointed towards a high in late in August, September of 2015 or 16 back there, that it had to clean it out.
Yeah, and that's, I think we did that. It's going to be interesting to see how we close today in the euro and the dollar in general. But if this is the case, you know, I'm a little concerned about the Euro Canadian, unless the dollar Canadian gets, you know, has to get out of this channel. We're in a pretty severe down channel here. We have to really get above like 125.20, 125.50, and then at that point, I think you got to start staring at the Euro Canadian as a possible long candidate, because the Canadian currency is, the sentiment is so bullish right now. It's contrarian wise, it probably needs to reverse, and we've seen a big reversal of the Canadian already, but I'm talking over the course of the next couple of days. So that's, you know, that's what I'm looking for in these Canadian pairs, and that's why I think you should keep the Euro Canadian on your radar, because even if a euro does have a pullback, you know, is it going to be too big of a pullback? I don't know. You know, I don't know if the euro is going to, you know, 110 again. It may come down to like 114 or 113. So if the dollar Canadian gets up to 126 and the euro dollar, you know, maybe, you know, drifts down to, you know, 116, you know, the Euro Canadian is going to be much higher as a result. So I think you got to keep these Canadian pairs on the radar here over the course of the next 24 hours. I don't think, let me double check. I know we have advanced GDP tomorrow for the US. Well, we have Canadian GDP tomorrow as well, so that maybe it won't even move until then. But just, you know, just some thoughts that I had about the Canadian that I wanted to share with you guys. Now, as far as what's happening with or what happened with the statement, you know, the statement, Steve, going back to your question, I think it takes September off the table completely, but I don't know if it really changed a whole lot. That's why the dollar's reaction was, in my opinion, a little overdone. I don't think it was necessarily, you know, as dovish as everybody made it out to be. So with that being said, especially in regards to what they talked about with the balance sheet, you know, that's why last night when I got home, I'm like, you know, and on top of it, I had a few beers, and I'm like, oh, well, you know, I don't know if this dollar's gonna, I don't know if the dollar is gonna go much lower from here, and that's why I personally had to pick it up. So what were your thoughts about the statement yesterday, Steve, that stuck out to you?
I think that the statement as a whole is being misinterpreted. Everybody took the mention of one more of the thousands of mentions of inflation we've seen as a dovish signal, which that was the only dovish part of the statement, but it's not something that we haven't gotten used to. I mean, the Fed in every statement always wants to keep, you know, a little backup, you know, somewhere there, so they can then bend on it and say that, listen, you know, you might have thought that, but, you know, I already warned you that, you know, I'm also watching, you know, of this, and we know they're watching inflation, obviously. But we've had almost a decade of 4 trillion of liquidity running through the markets. One of the two main pillars that led to this insane bid in asset prices and bonds and everything else was the trillions and trillions of liquidity, because it's not only the Fed, but the Fed was the first one and one of the biggest balance sheets out there. Okay, it's actually the trifecta: the Fed, the ECB that stepped in too late in the market, and as always, of course, the BOJ. So, in my opinion, after 10 years, when they reiterate once again that they've actually more or less taken the decision that the time to start draining liquidity from the markets is, you know, is upon us, I don't think that when that is included in a statement, that statement can be interpreted as overly dovish any way you look at it. That's my personal point of view.
Yeah. Okay. Well, you know, I think they had to leave some of the verbiage in there. You're right, to give them that flexibility. But we're going to be tightening globally. But the big issue with the dollar is, you know, where are we in the cycle versus, you know, everybody else that's just getting started. So I mean, that's really the bigger issue out there, overarching on the dollar. You know, really quick, Scott mentioned that there's a double bottom in the dollar Canadian on the, well, here's the lows, and this is probably what you're looking at, is the lows back in May of 2016. You know, if we can close the week, and this is, you know, there's still obviously today, tomorrow, going into the week. If we can close the week higher, or you know, at, let's say 125.50, maybe 126, that would be extremely bullish, the dollar Canadian. That is not going to happen today. At least I'm 80% sure that's not going to happen today. If it's going to happen, it's going to be because of Canadian GDP tomorrow allows that to happen. But if that is the case, and this low does hold, then I think you can trade against it moving forward for the next couple of weeks as we rally back to like 127, 128, maybe even as high as 130. But yeah, I see the same thing that you're seeing, Scott. And this move here in the daily has been, you know, obviously very overdone. You look at where relative strength, I'm going to take you out to the daily chart, and I'm going to zoom out. The last time we saw RSIs like this is when if you guys were with me listening to Wise Trade TV, when we had a TV station.
Wow.
Back in 2007, I told everybody that this Canadian is a generational low right here. And that's where relative strength is the same level, maybe slightly lower, but I just very, very slightly. But that at that point in time, I came on the next day and I said, we have hit a generational capitulation low in the dollar Canadian. That was when crude was at 180 or whatever the hell it was. And you know, we'll never see that price again. At least I'll never see that price again. Not in my lifetime. And that obviously has you know, played out, that it's, you know, we're not anywhere near there. But relative strength is to such an extreme that we're at those same prices that relative strength that we've seen on a daily chart back in 2007. That's why I think this Canadian can whip back if it really wants to. I mean, we could have a nice dead cat bounce, you know, to 126, 127, 128. That is all very possible at these extremes. That's why I had to myself be willing to step in front of the train again after getting stopped out yesterday. I had to come back in and say, you know, I'm willing to try it. Another thing that, if those of you that are following around with the Mexican peso that I've been trading, and we held the 618. We came down pretty aggressively. We held the 618. overnight. And, you know, roughly, I know we went up slightly below, but, you know, I'm looking at it more of as an area. I still think the US dollar Mexican peso could get some lift here. The problem is that, you know, you got NASDAQ continuing higher. I mean, NASDAQ just breaking higher. It's crazy. Stock market's still pretty strong. I should note that the last time that we saw this with the NASDAQ, it was bid up really early in the morning, and bonds were under pressure, like they are today. Okay, bonds are under pressure, and we got yields going up. The NASDAQ took a really nasty turn, you know, a few weeks back. So just kind of keep that in mind as they got us, you know, really bid up here right now. That was when we did one of these nasty spells a couple weeks ago in the NASDAQ. I can't remember which one, but it was very similar price action to what we're seeing right now. So just a little heads up. And plus, we just hit 127% extension of the NASDAQ here. If you guys haven't, we just hit it today, like right now, like we're at it.
And 5 equals 1 as well in the leg that started from the low break. I already said a couple of days ago that I'm looking for 5,990, and we tagged it to the pip right now.
Yeah, today's a generational high, I think. No,
oh, really?
I'm kidding. But you know, Blake, what I find interesting when you showed that monthly Canadian, how it held the 200 on the monthly, the Euro's high was capped at the 200 monthly. So both,
oh, really?
you know, yeah, take a look at the monthly. That's where it ran into some trouble on the Euro. The 200 came in there on the monthly. Maybe it was a weekly. It was a weekly.
Okay, on the weekly.
But yeah, right there. See.
Yep.
Yeah. So.
Yeah, we're coming right into it. The Canadian. Let me see. I wasn't even paying attention, but yeah, we're right in. Yeah, we're coming right into that.
Okay, so they're both weeklies. What a coincidence.
It is a coincidence. Well, hey guys, I gotta get moving for the open. Steve, I think you should show the traders what you were talking about the NASDAQ, how you came up with that number. I'm sure they want to see it.
Yes,
and,
I showed it to them the other days as well, but we're going to look at it because I think it's one of the markets that are of interest at the moment.
Okay, great. Okay, so here, I'm going to pass it over to you. You guys have a great trading session, and thank you very much for being here, everybody. And Steve, maybe you could go over some of those new pairs that we'll be adding to.
We'll do that.
We'll do service of, yeah, if you guys are not ForexAnalytix subscribers, you should be by this weekend, because we will be adding a bunch of new pairs and a bunch of new analysis to the platform. All right, thanks.
Have a good one, Blake.
Let's start with the NASDAQ, since you know, the conversation ended there. As you remember, Dale, because you have an elephant's memory.
Yes.
You know, we took a stab being short half position at 5,930 on the webinar, and it was the next or the day after that, I don't remember, that I said, listen, I don't believe anymore. You know, I was still like 10 handles in the money, and I said, I don't believe anymore that this thing is going to move lower. I think it's going to break higher. But it's okay, I'm going to keep half my position and add at 5,990, because we have within 3 handles the confluence of, you know, the first leg higher here and the fifth, and the 127% fib, as Blake mentioned. So here is the confluence. Plus, adding to that, we have moved almost 8% higher within 18 trading days, okay? And we've also, including today, we've also had 14 up days within 15 days. I mean, you know, this market is short-term as overstretched as it can be. Can it get more? Yes, sure it can. That's why, you know, I'm keeping my stop loss above the 127.2 to begin with, and depends on the price action, I might be even more tolerant with it, because, you know, I don't use high leverage anyhow, and I do believe that we're going to see some pullback. Reminding me of, because, you know, the conversation we had with Martin on the webinar that day, that I had mentioned that I believe that the Nasdaq is going to move to new highs a few days after we found a low here, and they explained why, because we had a perfect ABC correction. And after we saw the initial 3-4 days of momentum gain, it was more than obvious, that in such a bullish market, you are heading to new highs. And even the pullback I'm expecting here, I don't give it much of a chance of being an actual reversal of the market and this being a top of the market, but we might get a very decent pullback. There's no question about it. I remember Martin said that, listen, how can you say to people to be, to be long, etc. And I told him, that's not the point. The point is, the point in this conversation is that you have to respect the bull market, especially, at the end, it can go into a mania phase. And he said, like, listen, and I'm not saying it antagonistically. I mean, I'm saying it because I like having.
Steve?
Yes.
Just a quick interruption. If you go to the S&P 1 hour chart, I know you don't look at them. So what I was talking about at the opening of the show, we did that. We completed it. We took out the stops over 281 like I thought we would, and we're on the verge.
We'll see that as well, because my target in the S&P remains a little bit higher. Although
I think you're looking at not a generational high. I think today's the day, and I just wanted to point it out that what I was talking about, we needed one more stop hunt above 281, which is what I said, and we'll just got up.
We'll see in the S&P. We will have a look at the S&P in a while, and then we'll explain to you.
The high was 281.40, so that was enough.
Yeah, so I remember we were at 5,850, and Martin said, like, listen, looking for a 10% drop with a 3% stop loss is a good trade. And I told him that, this is a trade that statistically speaking, you're going to lose. Currently, we are almost 3% higher from that point. We're at 2.6%. So the question is, if we ask this question now again, but putting a stop loss at 0.4%, would that still be a good trade? I mean, it would be from a risk reward perspective, but that's not the question. I mean, statistically speaking, if you wanted to be short here with a stop loss of 0.4%, would that be a high probability trade? No, it wouldn't. So what I'm trying to say is that in bull markets, you cannot underestimate the force of the market and its resilience to the upside. Okay, so those two things I'm saying are not contradicting. We're just talking about two different time frames. So do I expect a pullback from a market that has gone higher 14 out of the last 15 days and has hit a confluence of 2 fibs? Yes, I do. Is it wise for me to expect that this is going to be the top of the Nasdaq? No, it isn't. In fact, if I see us testing, 5,800, which is roughly the close here, and rebound, I'm going to be looking for new highs once again. Okay, so if you want to be short here, which I am, but I'm not suggesting that you should do it, keep in mind that you should start your point of view by saying, I'm now trading against the trend. Okay, that's very imperative for somebody to realize when you are actually trading against the trend. On occasion, you will start trading against the trend and you will realize that you are actually now trading with the trend because the trend just changed. But that's not something that happens every day. Now, having to do with the dollar, and then I'm going to go back to the S&P and the several reversals that we see here, like Blake mentioned the USD CAD, we're seeing the USD NOK, etc., 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 etc. And speaking about the USD CAD and our friend there that mentioned a potential double bottom, I will tell you why this is not going to be a double bottom, but only in the short term. Okay, this is a weekly chart of the USD CAD. For us to recover from the previous bottom to this high, it took us, that was April 2016, and it took us 13 months. 13 months it took us to move from the low of this leg lower to the high that we found at the very beginning of May. It took us just 2 and something months to get back there. What I'm trying to say is the following. This was an impulse. This was a correction, and this is an impulse. End of story. I mean, there is no ifs, buts, or whatever else. The time that it took to get from here to here, and from here to here, in comparison to the time and choppy trading that it took to get from this point to the high here, leaves no questions about where the trend is since that reversal we got up there. Do I think that this is an excellent place to see the awaited and expected relief rally in the USD CAD and several other pairs? Absolutely. This is an excellent point. This is an excellent point to expect some kind of a recovery. Excellent point, okay? There's no question about it. Here we are. And this is what we were expecting, okay? The question is, do I believe that these lows are going to hold even though we are at a very high probability of getting a rebound higher? I don't. Okay, so I want to make that clear. Is this, we're currently seeing a tweezer bottom in the USD CAD. This is a very good start. We also have, as Blake mentioned, a very stretched bullish sentiment for the Canadian dollar, a very stretched bearish sentiment for the dollar, an extremely oversold market. We hit that low, which obviously, you know, some technical resistance and also some positioning resistance is going to be here. When I say resistance, I mean support. I meant resistance in the sense a resistance of letting the price go lower. So is this a point that we could expect a rebound? Definitely. And if I see, you know, a continuation, I'm going to believe in a rebound. But I honestly feel, and I said it days ago since we were here, if you want to trade it counter trend, keep in mind that you're trading it counter trend. Put your stop loss below the lows and see how far that can take you. But, and I'm willing, you know, to bet a beer with whoever of you wants to come to Greece, you know, to get a beer, or, you know, if you're close at the place I'm usually traveling, fine, that this is not going to be a low that's going to hold for long. Okay. This is not a complete impulsive move lower. In my opinion, there is at least one more leg missing, at the very, very least. Okay, so I'm expecting this low, even if it holds and provides a rebound up to 128 roughly, as Blake said, and they have the same levels on my screen. It can even take you back to 130. Okay, this is another resistance zone. I will be looking to sell into it, and I'm going to be looking for the double bottom to stop being a double bottom. Is that clear, Dale?
Oh, I'm just watching the S&P's putting a candle here. If you took the trade, you're up 270.
Let's have
3 handles now. Anyway, that's why, you know, I'll only interrupt you, Steve, if there's something that might have immediate impact for something that I said. So it's happening now.
Sorry,
so,
Dale,
I
but,
mean,
you know, I can't really help people on a 1 hour chart because, you know, it's completely out of my league. You know what I mean? It's,
yeah, that's fine. I just, you know, I brought it up at the beginning, and it did what I said it was going to do, and now we're lower. So now you could move your stop to BE, and or risk one handle on the S&P today. That's all.
That's what I see in the S&P. I see roughly an ascending channel, which we're currently testing. But if you see, I had already, this is a 4 hour chart. This is as low as I will go in a time frame. And I also see here, as you see, I had already drawn it. I also see here a potential of a wedge, as you see. I've put that with this intermittent red line. So yes, there is the potential for the SPX to roll over from here. Let's change the color, and okay, there it is. And because we also have the 161.8 from this move lower, actually this is a mistake, it should have been there. Yeah. We also have the 161.8 being just a little bit higher. So, Dale, what you're seeing is valid. There is the potential, if we don't see another thrust higher here, to move directly lower from here. But once again, I'm going to say, and there is the RSI divergence. It's even obvious on the 4-hour chart. By the way, since we're talking about an RSI divergence, we also need to remind here that we're seeing big divergences in the RSI, especially in the Nasdaq, even on the daily. If you see the daily of the Nasdaq, the divergence is more than obvious. More than obvious. I mean, we are a lot lower, although we are at an all-time high, we are a lot lower than we were here, okay? And a lot lower than we were here, actually. So, Dale, according to your beloved 3-drive pattern, we have a 3-drive pattern in the Nasdaq as well, because we had a high at this peak, we had a lower high at this peak, and now we seem that we're going to have, we look like we're going to have a lower high for a third time on the daily chart here. Okay, so that's another thing that points us lower from around current levels in the Nasdaq. Actually, already the Nasdaq is already 14 handles lower than the peak we reached, like what was it, 2-3 minutes ago. So yes, Dale, what you're seeing has the potential of actually being some kind of a short-term top.
Well, it's classic. The stop hunt was, you know, I know a couple other things besides 3-drives, and
I know you do. I know
vis-a-vis my handle Forex Stop Hunter.
Exactly.
So, you know, I teach people to wait for stops to be taken out, which is exactly what happened today.
I know, exactly.
That's
So
all.
I'm with you. The S&P has the chances of rolling over before providing one last push higher, like the Nasdaq just did.
Yeah.
I'm still skeptical though. But if I see the Nasdaq rolling over from there, as we expected, since as we know, one of the sectors that has also been driving the SPX higher during the past several months and, you know, even a few years actually, is the tech sector of the SPX. Obviously, I don't expect that it's easy for the Nasdaq to roll over and for the SPX to actually manage to produce one more high. Okay, but people need to be a little bit careful, because as you see, we do see this kind of consolidation and this kind of coiling price action here, but it's not impossible to see one more thrust higher. Okay, having to do with that, because it reminds me a little bit of the price action, and we mentioned it just yesterday. You remember that we had a conversation yesterday about friends asking if the Aussie and the Kiwi are reversing, and in both of the cases I said that for me those are incomplete patterns and I would expect one more thrust higher.
Yeah, you said that about the pound too, and we got it.
Yes, we got it for all, and not only we got it for all, but for me it's very important both of them reached, actually are reversing and seem like they might hold on a closing basis very interesting resistances. First of all, triangles, I warned that this is going to break to the upside. And you remember, I said that I've seen that a billion times, and we even had the funny conversation. I'm sure you haven't seen the billion, and I said, you're absolutely right. It's probably thousands, but not, not billions, obviously.
Oh, yeah.
So, yeah, this was a triangle. It broke to the upside. Okay, absolutely no surprise there. But triangles are also usually terminal formations. They give you one last thrust higher before getting a deeper correction. Today's candle so far, the daily candle in the Aussie, is a key reversal. And it seems like yesterday we stopped at this 161.8. I even wrote it in my analysis. We stopped at the 161.8 of this move lower yesterday. And it's likely that we were going to hold it on a closing basis. Now, if you go to the Kiwi tagged the 50% fib, you know, from the big move lower It also tagged the 127.2 of this extension of this move lower, and it's also showing so far. We have to be patient, okay? It's early in the day. I'm just saying what we're seeing so far. We need to wait for the close of the day to get confirmations. It also shows the potential of a key reversal. We also said here that one more thrust higher is very, very likely. We got that. I believe that these might be rolling over as well and providing us deeper corrections. Let me be clear. I don't likely expect them to be reversing to an impulsive move lower, but I do believe that they could provide some deeper corrections. Like, for example, let's have a look at the Kiwi. It peaked at 0.7560 roughly. I think that it can easily go back to 0.7375 and retest this breakout level, or even to 73. Okay. We need to wait for a little bit more confirmation. I'm showing here the potential. We need a little bit of more price action to feel more confident about that. Okay. So don't jump the gun. And if you are willing to jump the gun, keep in mind that the less you wait for confirmation, the lower the chances are. USD NOK, another key reversal. Okay, we hit a trend low, we're reversing. Same deal with the USD CAD. We've already broken below 8. We've already registered, let me see, roughly call it 25-month lows. I do not expect that any rebound from here is just going to be a resumption of a bullish trend or whatever. I think this boat has sailed. So in my mind, it's about how high can it correct. Probably not more than 8.15 in my opinion. Okay, so I'm out of all my position. I made a killing out of this by following the USD CAD paradigm, and I'm gonna be looking to jump on the short side once again. Okay, I believe we're gonna see lower prices, but today we're seeing also here a very good potential for a rebound higher. We'll see how far that can take us, but you know, it's also an extremely oversold market. It needs a relief rally. Nothing moves in a straight line forever. Can the Aussie and USD CAD rally side by side? You mean the Aussie USD and the USD CAD, or by V? I'm asking you V. Or by the, what about the Aussie? This move higher is not over yet. I agree with you. It's not over yet, the move higher, but it needs a, you know, first, you know, some kind of correction. Targeting 81, 82, whilst above yesterday low. I think that's a dangerous position, V. I think we might correct lower, lower than what you expect at the moment before actually moving higher. But I do agree with you. I think we will move even higher. I'm just skeptical about your stop loss. I think it might get you first, you know, knocked out of your position and then move higher. So you know that's my only worry. But I do agree with you that we're going to see high prices.
You still there?
Yes, just reading questions.
Oh, okay. I'm not used to a pause.
Steve, any view on the guppy?
We're not
Okay,
used to Steve in silence.
Yeah, by the way, yes, the pound did give us a new high. It hasn't tested yet the upper channel, but theoretically speaking, yeah, this might be it. But you know, we still need to see confirmation. I mean, it's still quite early on the day. And having said that, let's go to the pound yen. Yeah, if Mozilla decides, okay. Nothing has really changed with that. I mean, I said 2 days ago that, in my opinion, having rebounded from where it did, things are not so clear anymore, because I can make a case both for moving to new highs and both for rolling down for one more low. Seeing the USD CAD as well, I would, let's delete all this. I would give a little bit of a higher percentage at the moment, but I'm really torn. So what I'm saying here, I'm not very confident about, but I would give it a higher chance of producing another low before higher than going higher straight from here. Okay, but this is one of the things I don't have high conviction at the moment. So I'm just saying it. I won't trade on it anymore. Okay, until I see some more clarity. So I'm just giving you an answer since you want one, but please take into account that I don't have high confidence in what's going to happen with this pair at the moment. Let me see, because I missed a lot of questions while we were talking about when parity. Okay, Paddy said when parity in Euro USD seemed certain, we got 115. So when 125 now seems in sight, we might get 105. Yes, listen, I understand the concept, and you're absolutely right, and that's what usually the market does. It tries to get people wrong-footed, because usually when something is a common understanding, then what we see is that these kind of positions are already overcrowded, and that's why the market usually reverses. But really, to be honest, I see a lot of skepticism. I still see a lot of skepticism about how high the Euro USD goes. While when we were trading down at 105, I remember that those of us that were bullish the Euro were very, very, very few. While currently people that are looking for levels to actually see another resumption lower in the Euro are still a decent amount. So I'm not very sure that this is so much the case with Euro USD. But what it is the case is that in the short term, the market might capitulate, and that might be a catalyst for us to see a correction lower, but because it is overdue for a correction lower. Okay, but I don't think we're going to parity. I didn't think of that when we were even close to 105. For whoever is listening here, you must remember that. And needless to say, nothing has changed. Thank you for your good comments, Ziggy. Diego, cable daily, could you take a look at the short term? Yes, let's see at Diego's. Since we had a fast look at the cable, let's see what Diego is looking at his chart. Let's zoom in on it.
Diego does a lot of harmonic work.
Okay, so Diego, from what I understand, you're also looking for a high up here, correct, mate? Which more or less coincides with what I'm looking at. I mean, I do believe that it might move a little bit higher from here, but I'm also looking for a reversal in the cable. I said, some days ago, I'm expecting a new high. I think I repeated it yesterday as well. We got that already. Ideally, I would have wanted it to have touched 132, ideally, but I mean, nothing works like to the pip, almost nothing. So yes, I'm totally with you. And you have another chart. You say that cable might also be completing a 5-wave weekly cycle. Let's have a look at this. The second chart. Okay, you're noting of some divergence here. I also see some divergence here. Now, about the 5-week cycle that you talk about, I don't know what kind of a cycle that is. Probably some type of analysis I'm not following. but I take your word for it because, as I told you, I'm seeing the potential of a topping here in the cable as well. So for a topping formation. So okay, so you have two different types of analysis that point to a reversal. What would be your confirmations on a recovery? Zach asks for USD Canadian. To begin with, I want the key reversal to be, Zach, I want the key reversal to be confirmed, which means that I want a higher close today. And then I want to see at least one strong day of follow through. That would be a confirmation for me, Zach. What's the case to talk about future? It's more sense what Blake said. We are trader. Sorry, Steve, but add a little about if this is a low or not. For now, it's a low and chance to go higher is high. If you value my input, focus more on what happened or might happen in the coming days. Maria, I think that's exactly what I'm doing. I mean, we always analyze what has happened, and I'm of the few people I've seen, I'm not talking in our community, that look at any random chart, that I'm drawing to you what's going to happen in advance. I mean, my opinion, and I even leave them on the charts for that exact reason. I'm always giving, you know, my main thesis about something and an alternative thesis, but I'm always quite clear of what I consider to be my main thesis. Yesterday,
I agree.
Yeah, yesterday, as an example, I said, I expect one more high in the cable. I expect one more high in the Aussie. I expect one more high in the Kiwi. And I can remember like 100 examples. 3 days ago, I said I expect one more high in the NASDAQ. I mean, isn't that exactly what I'm trying to do here? USD CHF. Yes, thank you for the question. Thank you for the question, because we need to see the Swiss franc once again. It's extremely interesting. I'm going through the questions so I make sure I didn't lose something. Okay, Aussie and USD rally, we covered that. Perfect. Okay, let's go to the Swissy. I really believe that, you know, we are looking at very interesting days for the Swissy. Look at this. This is the Euro Swiss. It's now in beast mode, especially considering the low volatility of this pair. You remember how early we indicated that something has been changing for this market, okay? And once we broke above this channel, look at the acceleration. I mean, these candles are freaking insane for the very, very, very low average true range this pair has. And we will soon be coming at a very important resistance, you see, because that was a megaphone formation. I honestly really believe, I see a lot of people saying and writing on Twitter, etc., that the S&B is active in the markets. Let me say it once again. This is not an S&B move. This is a true bid on the pair. We even had the conversation yesterday with Stelios. To hold Swiss francs at the moment, the S&B has the lowest, as far as I know, the lowest interest rates on the planet at the moment. For you to be holding Swiss francs, you have a cost. And now that a lot of the risks of the Eurozone have receded, people don't have a reason to do that anymore. So I do believe that this, if we don't get any interruptions or, you know, some instability again in the Eurozone or whatever, I do believe that this is an honest bid, and I do believe that this market is changing. And I do believe that this market is now in buy the dip mode. And for those of you that might not have been paying so much attention to this pair for the last few years, let's put a few things in context. Okay, this is the Euro Swiss weekly chart, and please, I would like us to zoom out a little bit. Let's give a little bit of time. Okay, this thing was trading in 1993 at 180. Okay, and even if we go back at 2007, 2007, it was at 168. It went all the way down from 168. It went all the way down from 168 to below parity. Do you understand what the potential is going to be? And look at the weekly. We now have a higher high for the first time after a long time here above 112. And we're currently testing the 200 weekly moving average, okay? And this is the trend line. Do you understand what the potential of an actual break above here is? I mean, there is a huge potential. So now that we've talked about this, and you need to remember that I warned you about it weeks and weeks ago that something is changing. And that's why I keep repeating, and now we're going to go back to the USD Swissy that our friend here asked. And now I'm going to keep repeating what I said. If you want to be short for any reason, the Euro USD, because you believe that it's reversing, you should definitely instead be long the USD Swiss, okay? Because you see what's happening in the Euro Swiss. You don't want to go against that. So if you want to be long the Euro, okay, if you want to be short the USD, you should do it against the Euro. But if you want to be long the USD, sorry, you should do it against the Swiss franc. There is no question in my mind about it. We still, I mean, this smells like some kind of a bottom here. It's more than obvious. Even yesterday, we got a very nasty shooting star candle, and today, mostly due to the Swiss franc move, we are completely invalidating it. So I'm seeing some real strength here. And I had written to the analysis that a close above 95.50 is going to be important. We didn't get that yesterday, but it's very, very likely that we're going to get that today. Okay. So something is changing in this market, and it looks more and more likely that it might actually produce some decent pullback. Okay. Let's Eurosi. Do we have a guest? Because I have a lot of questions. What happens today, Dale? Do we have a guest here?
Yes, he's waiting patiently.
Okay. So I'm going to pass it over because anyhow, it's not that it's one question left. I have a lot of questions left. Like, really sorry, guys and girls, we're going to go over it tomorrow, but you know, we're really out of time. I mean, I understand we have a lot of movement and we have a lot of questions. I try to take them, you know, in order. We will cover the rest, you know, tomorrow. And those of you that are on ForexAnalytix, obviously, you're going to be seeing, you know, updates live, etc. Okay, thank you very much, and sorry for waiting, Dale.
Okay,
have a nice
Steve.
interview.
Okay, thank you, Steve. Hello, Sheldon. I'm going to make you the presenter. It's been a while, buddy. Looking forward to talking to you, seeing your charts. Made you the presenter.
Dale, can you hear me?
Yes, hi, Sheldon. How are you?
Doing well. Well, yourself?
Good, buddy. How are things in Patagonia?
Pretty good today, actually. That looks like a nice day outside.
Okay, so I'm waiting for you to share your screen.
Okay, I'm
And
just
there. Okay, that's Twitter you're showing, so maybe we could get some charts up there. Okay,
yeah.
beautiful. So Sheldon McIntyre, I've interviewed Sheldon, I think, a couple times on FX Street, Sheldon, or at least once, right?
I believe it was once, yes, quite a while ago, but yeah.
Yeah. So you're an expat from Canada, and you missed the housing bubble there.
Yeah, I did miss the housing bubble. So
Okay, so well,
I have
there
no
are
regrets.
there are millions of bubbles, and I'm pretty sure you have a nice lifestyle in Chile compared to what you had in frigid Canada. Am I correct?
Well, in fact, you could argue that in Chile we were in a housing bubble as well, not to the extent of Canada or United States, but
It's global,
we've
huh?
seen, yeah, prices here have went up a lot in the housing market in Santiago.
Has the
And that I've
currency
benefited.
okay? Has the currency with dollar weakness appreciated down there against the dollar?
Not too much, actually. A little bit, but it's been more of an issue of copper affecting the price down here.
Oh, okay.
Yeah, Chile's the largest
Yeah.
exporter of copper, so.
So that's great for the country.
Well, that's one of the reasons when copper was a nice high price going into 2008, 2009, and a significant rebound after that led to the housing bubble, among other things here.
Right. Okay, so we're looking at S&Ps here. I think that we're getting, we could end up having a decent reversal today. A lot of people were targeting 2480. Our own Steve Olge is short NASDAQ. Maybe the S&P has 2490 on a fib extension. I remember when you and I talked a few years ago, we were prematurely bearish a while ago. So I hope you weren't as stubborn as me.
No, I think the last time we talked was right at or just at the beginning of that slow deceptive topping process that began in the end of 2014.
Right.
No, that didn't really, I've been fine in this in terms of participating in the market. But, that slow deceptive topping process really reconciled itself with that major low in early 2016, and then it's been pretty strong after that.
Any signs that you see technically of it waning, or a lot of the Super Bulls have targets? I actually interviewed a guy who's looking for by 2020 like 4,200. That's pretty, a pretty bullish target, don't you think? So a lot of people looking for 26, 27 by year end. Do you think that maybe the fourth quarter may finally bring about? It's been such a long time since we've had a 10% correction. Is the market vulnerable? And what are you trying to say with your interest rates? We're at 5,000 year lows.
No,
before
it was
the turn.
great. Was the first chart that actually comes up in that particular file. But in terms of the S&P price targets, I don't really fixate too much on doing price projections for the market. I think I told you the first time I met with you, and I actually, if you go back and look at my Twitter stream or stock tweets, you'll see that I was actually talking about a secular bull market in 2011. That's where I started becoming pretty bullish on the market. I'll just bring up my S&P file.
So, I mean, with interest rates, we're at 5,000 year lows. So that means that even before Abraham and Moses' time and the Pharaoh's time, we were getting cheaper money to build condos than the Pharaoh was to build pyramids.
Yeah, pretty much. Yeah,
that's pretty amazing. That's
and we could build the pyramids. There was enough labor available.
Oh yeah, labor, right? You didn't have to go. You didn't have to outsource labor. In fact, it was probably aliens that came down and gave them the technology to build the pyramids. Anyway, that's another.
Well, that's what my 11-year-old daughter tells me. It was aliens. So
really, and she might be right. The wisdom of the young.
Who knows?
Okay. So what are we looking at here? You have some bands up here, and
just some envelopes. Moving average. This isn't the best chart, but you'll see here. Really, 2011 is where I figured that was it, and that we were beginning of a secular bull market. You'll see that for me, the key moving averages on a long-term basis are really the 200-month and the 200-week. And usually, when you have a secular bear market like that very quick one, 2008, 2009, you'll see indexes come down or even drop below the 200-month and then rally into the 200-week, sort of a dead cat bounce or a cyclical bull market like we saw into 2010. You'll see it stopped dead there in 2010 at the 200-week. Once we got above and we spent basically the third quarter of 2011, you'll see there how the market basically, I think it closed only once below the 200-week, and then it was from there we really took off.
Well, in 14 and 15, we were hitting those upper bands. where are they coming in now? Your chart doesn't go unless you could bring it down. Do you think we're going to go for those? Do you think we're going to go for those upper bands that the market was tagging in 14 and 15, 2014, 2015?
Well, yeah, I don't know if we're going to get there in the short term. I think in the long term, like going out, 6 months, going into the end of the year, I don't see why that won't happen. I remain a secular bull, and actually a lot of people are talking about breadth. I've noticed in recent days deteriorating. I really don't see that in the market when you look at it from a longer term perspective. I mean, I just wanted to, bring up briefly the monthly of the S&P here. When I'm talking about the 200 month, you'll see here in 2002, we came down, but not quite, and then we really undercut the 200 month. So that tells you just how washed out. We've only seen that basically one other time since 1945, and that was back in the reset in 1974.
Oh yeah, where it took like 20 years to break out over 1,000.
Yeah, you'll see there, and then once again you're going to see the 200 week come into play, 200 week coming into play, and that's telling you it's getting support and the market's resetting for the next bull market. And of course, that's what we saw take off through there.
So you think that? Don't you think it would be a natural thing and really wouldn't change the bull market if we someday pull back to that double top you have up there that was 58% above the trend line and 137? That's like the 1550 level, and that would just be testing a major breakout. But you don't see that in the cards anywhere in the future, anywhere in the near future.
No, I think that if anything, we'd be looking at max the low in
last the election low, 2030 or 1800.
Exactly. But why is that? Simply because one of the things that I also look at, and that's very interesting, is that the election low in November actually turned out to be a bullish outside month. And a lot of times, not all, but a lot of major bottoms are defined by a bullish outside month. You'll see here on the S&P chart I have how many times you've seen that, the little pink exclamation marks, how many times you've seen bullish outside months come into play.
Yeah, okay. Nice.
And you'll see. So that for me, if we get below there, then obviously we're going to go into the 2016 low, but I just don't see that happening. That would be a major stretch at this point. And one of the other things that's interesting about something that I picked up a while ago, it's not something that on a yearly basis, if I can find, I have so many charts here, it's kind of insane, but we had in 2015, we had a bullish outside year, which is only, I believe, the third time in history we've had that on the S&P.
What year was that?
In 2015, sorry.
Okay.
Or 2016, that's my bad.
Yeah, that's a big candle, a yearly candle.
Yeah.
Interesting.
Exactly. Yeah, which has only happened 3 times. You'll see here, here's the chart here. You got to go back to 1935 and then again in 1982. Well, 1982, you know what happened, it took off. And you'll see there again, there's the third. And this is something from Citibank that talked about the gains that followed that were 28 and 17% respectively. So you can, look, and then it was actually 7 years, then proceeded to post another 7 up years in a row. So, I'm not, that was in 1982, following 1982. So the potential for a further upside is quite significant if you look at it from that as a precedent. And that's actually the historical precedent that also framed my move to a secular bull market in 2011, that there was a lot of symmetry with what took place from the late 1960s into 1982, and you can see that again from 2000 across. I mean, it's not identical, but there's a lot of symmetry there and how the moving averages played out, as I mentioned, the longer term ones. So
you haven't lost your Canadian accent, the way you said out. You haven't lost it, buddy. So let me ask you this, Sheldon. I know that this is your main focus. What are you looking at inside the market? Are there any sectors like oil's been under pressure? any commodity markets within there, and perhaps what's your take on what's happening with the dollar being under pressure, if you think that's cyclical or secular? And obviously we know what you're looking for in S&Ps, an ongoing bull market with fairly low probability of some type of correction, but nothing to interrupt it. So the dollar, the main shift this year that I've noticed has been the dollar bull market coming into question. You have any views on that?
Well, at this point, I would not define it more than a cyclical pullback within a secular bull. And why do I say that? If you bring up the weekly chart, you'll notice that the spot on the US dollar is just about at the 200 week. So when I'm looking at all markets, whether it's commodities, currencies, or equities, and even to some extent the treasury markets, you can see the play in here a little bit, but
yeah,
what happens is, like I said, it comes down or undercuts the 200 month, and once it gets above and the 200 week is turned as flat or to the upside, you're in a secular bull. So at this point in time, this pullback, for me anyways, is still defined as a secular bear, if you want to call that, a secular bull pullback. I would suspect that we were going to see some strength coming into play. You'll also see these lows also
right, 92-ish,
yeah.
Maybe we'll take out. That's when I think there'll be a pretty big capitulation of the thesis of a bull market, and the dollar would be closes under 92 probably, and that's your 200 month moving average there.
This one here is the 200 week. The
week,
200
okay.
Week.
Okay, because the euro actually touched its 200 week today.
Exactly. So did I believe the Aussie dollar also.
Canada hit a 200 week low the way we have it paired here, USD CAD. You showed like CAD in a futures chart, so we're almost there for you there too. Okay.
Yes, we are, and the only one that's really far from the 200 week at this point in time is the pound. Is way
underperforming.
Yeah, you will take a look at the weekly on the spot here. You'll see that it's still got a long ways to go.
Oh yeah, to go to 47. Or there's something sick about cable.
Excuse me?
There's something sick about cable compared to Aussie and Euro and everything. It's really been the relative weakness. So you think it'll get up there?
But you'll notice here in the monthly, though, we did get a bullish outside month last month. So that low of June would be, if you were to go long, that would be your stop there.
Okay.
If you blew through that, then you would be going back down to the 120 level again. I've been watching it closely. I think that it has printed its a major low, but as with all the things that undergo a major decline in a rapid manner, like you've seen here, there's a lot of price compression, and that has to be reconciled, and it probably will see this before you'll see something meaningful develop on the upside.
I mean, do a little work sideways, but the low's in. That was
exactly.
Okay.
Yeah, and there's, as you know, Dale, I mean, you're a long-time market practitioner. You know that when you have these rapid declines. Hey, I believe in experience, my friend.
I know. You can't learn it. You have to live through it, don't you?
Exactly. So, and you'll see in the long-term momentum here, you're almost going to get across. So we'll see how that plays out.
Okay. Anything?
And then of course,
go ahead.
Well, you mentioned that. I'll just bring up the Chilean peso to the US dollar pair here, and just to give you an idea.
Do you trade it? Do you trade it? Do you convert to, say, for example, your cash holdings? Do you convert your cash into what you believe is going to be the strongest currency? Or I
actually, I mean, here this is the US dollar Chile peso pair. Right. So, I was long the dollar versus the peso, and here we'll see that it got strong support off the 200 month there, and you'll also note there's a lot of historical support resistance at 550. So once that took off, and there was a play there, but I was out up in here. So
Okay. So how about the Mexican peso, which has been a pretty wild trader with, you know, the elections and then things coming back? I'm interested in your view here.
well, you know, I don't follow Mexican peso too much, but you'll see here there's a topside trend line that comes through, and it's stalled there, and now it's coming off. That's the monthly chart. On the weekly chart, let me bring it up here. I haven't looked at the weekly in a bit.
Community noticed that Sheldon uses a telescope in making decisions. You know, we've seen mainly weekly and monthly charts to get the feel and the rhythm of direction in the market. And I think you need to use, even though I talk about hourly charts like I did today on the S&P, you really can't trade long term. You can't have a view unless you get away from your microscope and use a telescope. So
Yeah, well, you know, I use daily as well, and I do occasionally when I do stocks, I will go down to an hourly. But you know, one of the interesting things is because of, you know, the declines we've seen in currencies or commodities and what we saw previously in equity markets. I mean, these were generational collapses in which, if you don't go back and take a look at where the support, where the resistance are, where is this situation in terms of bottoming, I personally can't do it without a weekly and monthly chart. And then from there, I kind of build up my working thesis from there. I mean, you can see the same when you go to the commodities. In some ways, it's even more visible.
well, you're reading my mind. You know, the oil shares have been some of the weakest. What are you bringing up? Oh, Baltic Dry Index. Okay.
No, that's just the first chart that comes. I'll bring up I got the W2EI chart here on a monthly basis. And once again, you know, you can see how you got to go back to 1990, that 41.15, how important it was back in 2008, 2009, and then once again here it just touched it in June, pretty close to it again.
Right.
So, you know, this is a whole part of bottoming process, and if you could take a look how far it fell below there, I mean, that is just massive. So, you know,
So
I don't know.
Is that constructive looking to you, or it's a stand aside, wait for more evidence to develop before you would really have an idea? You're probably a pretty big believer that we're not going to see 2605 again. Is that correct?
Yeah, no.
Okay.
I just don't see that happening again.
Okay.
That happened again, then I think we'd be looking at a global economic meltdown of some proportion. So,
Okay.
and then you might see a global financial, at least some global financial stress as well.
All right. So you think that oil, you know, that could be, you know, everyone's pretty complacent. They were sure nervous last January with what was happening to high yield debt and the oils and the MLPs. So
Yeah.
you think that if there was some type of bear market and we took out those lows or challenged those lows, that could be the catalyst for problems with deflation?
Yeah, you know, and not only that, I think that you put the Middle Eastern
Currency and
and just the debt situation, the pegs that exist in the middle, currency pegs in the Middle East. I mean, everything would be under stress in that part of the region, and they're already under stress.
They are.
In terms of you know, so when most of those countries have they're pegged to the U.S. dollar, so it'd be interesting to see how that plays out. This is the weekly chart. You know, once again, it shows the 41.15 from 1990. But you know, how I see really with oil is that you'll notice that there was a clear, you know, move and price compression and momentum. You'll see it only matched on these two other times. So it's only natural we saw this, and it's followed a very clear rhythm along the 40-week moving average there. So we get above there and get above where I have 7 labeled, which is about 52-ish.
Yeah.
We could rally
up 62 at least, right?
Yeah, I think we could rally up 60 to 62. That would be, you know, and
that
probably
would help the market. You think it could be war driven? You know, I know some guys that are thinking that there could be some conflict in the Strait of Hormuz, and part of this Qatar thing is setting it up.
You know, it's a good question. At this point in time, the Middle East is probably one of its more tense situations we've seen since 2001, 2002, I guess. And I was thinking about that yesterday, actually. What is the trigger that we're going to be looking at for some pullback of known in the equity market? And I keep coming back, well, we haven't seen a major geopolitical event take place that's resulted in conflict, and that just might be the trigger for oil, rising, but also for equity markets maybe to have that serious pullback that people have been looking for a while.
Yeah. Unless
that's all speculation. So
yeah, I know. You can't trade on it, and who knows? Everyone thinks that that it's impossible for there to be a conflict with North Korea. It's unimaginable because of all the casualties that would occur with Seoul being across the street.
Yeah.
But I've been reading some things that it's possible. It's not, according to the generals, it's not unimaginable. So what they said, what's unimaginable is North Korea having the capability to hit the U.S.
Yeah, no, first of all, the United States has the capability to take those missiles down electronically if they want. So
yeah,
I mean, there's nothing sophisticated about North Korea in any way. I think the most sophisticated thing there is their propaganda machine.
Yeah. How about gold, Sheldon? As long as we're talking about this, it's had a better pattern than crude. I'm wondering if you're constructive on it with what's happening to the dollar. And a lot of people think the stock market and gold can't rally together. It's kind of a hedge for a stock market decline, but they could both go together, can't they?
Yeah, they can. And bring up the weekly here on gold. You'll see you'll see the 200 week has flattened for the most part, and now gold's consolidating along there. And this particular line, I believe, goes back to the 1980. We pull up the monthly. This horizontal line goes back to 1980, if I'm not mistaken.
So do you have a site here on stockcharts.com? Are you on? You're on, because your charts are showing up here. Where people could go to stockcharts.com to see your work?
No, they're not. No, they're
okay.
No, they're not visible to the public. Yeah, it's the 19. Sorry, it's from 2008, that high. So when you go back to the weekly, that's your support level as I see it for gold. I personally.
Where was that last chart? That was okay, because you were showing a longer term chart.
Yeah.
And the high in the last bull market was 880. When the U.S. When Russia invaded Afghanistan, and that's kind of could be, if there's a bear market, a natural point for it to go back to a previous bull market high. But it looks constructive, doesn't it?
Yeah, it does. And also another thing that I look at is the Aiden sisters. They have these 8 and 11 year.
Aren't they in Chile too?
No.
They're in South America. They're in Costa Rica or somewhere.
Yeah, I believe they're in Costa Rica, if I'm not.
God, I haven't heard that name in a long time. That's a walk down Maryland. Memory lane.
Been around for a while.
Yeah, that's good.
And they're looking at their gold cycles. So if you look at that, we should see a high around 2019. And then we'll go through another pullback. Cycles are never a precise science, but these have worked pretty well since the count started in 69.
I've never heard of an 11-year gold cycle before, but there have been some major turns on it. Interesting. Yes. And a 7-year low, 8-year low, and 11-year highs.
Yeah.
Okay. So
there was one, obviously. You can
go ahead.
No, I was just going to say where I'm actually a little bit more constructive
Silver.
on. Yes, you're reading my mind.
Yeah, because the gold silver ratio looks pretty constructive.
And look at this bullish monthly reversal off the 200 month.
Yeah, I mean that was. Yeah, they had a few flash crashes to try and clean out all the longs, which they did, making new lows for 2017, and then
now we know that 14 level or just below the 200 month is major support.
My partner Stelios is glad to hear that. What I'm hearing, potential targets of about 25. Is that reasonable, or do you think we can make new all-time highs?
Well, all-time highs is, first of all, we got to get above the 200 week, and then from there, I'm going to be a buyer of it. From there, I was on vacation till this week, so I would have liked to have participated on some of this move already. But yeah, I think silver's about to make the turn above the 200 week in some kind of weekly type pattern or bullish outside week, and I'm a buyer. As far as getting back to 49.50, yeah, we'll have to see how it plays out. That's a pretty big move.
But 17.5 is going to be your trigger over that moving average.
Yeah.
Okay. So Sheldon, I forgot. Do you have any kind of service that you offer? Are you managing money? Are you? Do you have subscribers to your work? Do you have a website? What's your business model?
I manage my own money and a couple other people, and that's it.
Okay.
I don't have anything to subscribe to at this point, no.
Okay. Well,
that's a tough business model.
You have no axe to grind, so I want to thank you double for coming in here and sharing your work and updating us on your views. Anything you want to wrap it with?
No, I can't think of anything really.
We covered a lot of ground.
Yeah, definitely have. I would just only add that I'm extremely bullish long term on the new China versus old China. I really think that there's a multi-year move developing now in new China stocks like Alibaba, etc. I also like SoftBank out of Japan. Actually, I should bring up Japan if I may, just for a second. I think it's probably the most interesting long-term chart out there from my perspective. It could be, Japan, actually the Nikkei could be setting up here for a major move.
Okay.
This is the 200 month, and you'll see here it's right at that 20,000 level, which has been a stubborn price level, but this is like it's maybe a little too deep to call it a head and shoulders bottom, but if that goes, those highs from the late 80s are going to be hit moving forward.
Interesting look. Maybe one more pullback to 14,000 before that happens, or you think
no,
that could be no more pullbacks. So,
not that far, because once again, this is my reasoning. You'll see we've already had a successful test of the 200 weeks, so it's now or never for it, I think.
I got you. Now or never. Great song, I Do It, by Elvis Presley. So we'll wrap it up. My trading warrior brother, Sheldon McIntyre. People could follow you at HERT, H-E-R-T Capital on Twitter. And what a pleasure to hear your voice and your demeanor and your long-term telescopic views. Thanks so much for edifying our community today, buddy.
Well, thank you, Dale, for the invite, and I hope we can do it again, and best of luck and success with your endeavor here. So
thanks so much, Sheldon.
You're one of you're genuine guys in the business. Very few of them left.
Yeah, I almost wasn't left 3 years ago. But still, I'm still here, and I appreciate the compliment very much, Sheldon. And my mission is just to build up people and build up traders and help them avoid the landmines I've stepped on. So it was great talking to you. Why don't we plan on sometime later in the fall getting back together and seeing if the Nikkei broke out and some of this stuff manifests?
Sounds fair.
All right, Sheldon. Thank you so much, my trading warrior brother, Sheldon McIntyre. And you could follow him at HERT Capital on Twitter. Thank you, everybody. Have a great day. We'll wrap it up with TGIF tomorrow. Thank you, Douglas. Glad you enjoyed it. And most of all, besides clicking the link to become a subscriber, glad you enjoyed, Kevin. Don't just count your pips, count your blessings. See everyone for TGIF tomorrow.